Hello to the first semester students of BCom, KLSGCC. This is Professor Deepa Tangankar dealing with financial accounting. In the previous classes, I have taught the first unit, but now I'm going to deal with the third unit. Second unit was being dealt by Sir and Ravi Sir, and then I'm going to deal with the third unit again. So welcome you all for the class. This is the third unit is all about farm accounting. So let's begin with the class. Now, what do you mean by farm accounting? Now, all of us know that in India, the basic occupation, the main occupation of Indians is farming. Okay, and then India has gained lots of importance due to farming. These days, we find recent trends in farming. That is, you find agri- ag- organic farming. Okay, you find something, the recent term, that is, you find it in terms of organic farming. Okay, earlier we had farmers which were quite illiterate, okay, and depending on the traditional method of farming. But now again, then we had the era where we had more of chemicals being used, and then we are still into the chemical products which are being produced, okay, which have been cultivated. And recently we are hearing a trend called as organic farming. Okay, so farming is again gaining an important importance in foreign countries. You find farmers coming up with modern technology. They use modern methods of farming. They have also adopted a technique called as farm accounting. Now, the way you find accounting being done for an organization or for a business concern, similarly accounting is also being done for farmer products. The whatever farming is being done on those products, also you have accounting being done, and that is nothing but what we are going to study into this particular unit. Now, farming these days is basically basically mixed farming. Why it is called as mixed farming? Now, see, earlier farming in the sense we had only food grains or agricultural products being grown, but now apart from food grains, you have something called as animal husbandry. You find pottery farming. You find sericulture, that is silkworm breeding. Okay, then you find piscicultural, that is fish rearing. Okay, rearing of fish. Then you find floricultural, that is growing of flowers. Okay, you find these days farmers exporting flowers from from India. There are farmers who export to the foreign country also. And also you have an import of food grains or import of farm products being done. So earlier you had only farming which was being done for food grains or for agricultural products, but now you find farming being done in case of fish, or in case of flowers, or you in case of plants. Okay, you find silkworm being breeded, and then you have silk saris being manufactured and so on. All right, so these days farming is not only based for agricultural products, but for many other products, like you have pottery farming and so on. All right, so farm accounting or accounting for agricultural farms is the application of accounting practices to the agricultural operations. In simple terms, now what do you do? What do you mean by accounting? Is farm accounting is uh, whatever accounting you do, that is whatever agricultural products are there, for those products you have accounting been done, that is called as farm accounting. Okay, basically what you do here is you maintain the accounts, maintain the records of farm products, okay, into a specific manner, into the books, and prepare the accounts relating to farm activities by applying accounting principles and practices. So you maintain the records, you prepare the accounts, you maintain it into proper books, and then prepare the accounts by using the techniques and principles of accounting. Okay, so that is nothing but farm accounting. I hope the meaning of farm accounting is clear. Basically, you're recording recording the transaction, recording the farm transaction in a systematic manner, and then using the accounting principles and techniques for preparing the accounts. All right. So, what are the features of farm accounting? Now, there are different features of farm accounting. For the first one is maintenance of accounts. See, now when you're preparing the accounts, even if you see in terms of financial accounting, now in financial accounting we prepare trading P&L and balance sheet. We have studied in the previous class. That is, when we are preparing final accounts, we prepare trading P&L and balance sheet. So you're recording the transaction and then also maintaining it for future use, right? Similarly, you're preparing trading profit and balance sheet so that you're maintaining it so that you can take future decisions. Similarly, in farming also, you're recording the transactions in a systematic manner, farm transactions into a systematic manner, and also maintaining those accounts for the future decisions to be taken or for the future progress. Okay. So next one. These days, most of the farmers, you don't find records being done or accounts being prepared for farm accounting. Basically, the one who are into corporate farming and all, they do this farm accounting. But we as a farmer, he should maintain the accounts that he gets to know what is the amount of profit or what is the amount of loss being made. So maintaining the accounts, recording and maintaining the accounts is important, so that the farmer knows as to what is the amount of profit and what is the amount of loss being done. All right. Next one, separate bank account should be maintained. Now normally when you are having business being done, we have studied in accounting theory, that is, you have to have a business is a separate legal entity. Separate legal entity means what? You have to have your business transactions being maintained separately and your individual transactions being maintained separately. Now what does this mean? You cannot combine your personal expenses with the business expenses. Okay. Now if at all you go to watch a movie. Okay. Now when you're going to watch a movie, the expenses you make for watching a movie, those expenses must be maintained from your personal salary or from your personal income. You cannot mix those expenses into the business expenses. The movie expenses cannot be mixed up with the business expenses. Okay. Similarly, a separate bank account should be maintained. You should not combine farm expenses and your personal expenses into the same account. That is, you cannot have there should be a separate account for farm and separate bank account for your personal expenses. You should not combine your personal expenses with the farm expenses. Okay, that is the meaning of separate bank account should be maintained. You should have a proper account being maintained, bank account being maintained for all the farm transactions, and another account for the personal transactions. Okay. Next one, labor cost of family members should also be given. Now most of the farmers, what do? They involve their family members for farming. Okay, to cultivate the farm, they use their own family members for cultivating the farm. Instead of getting labor from outside, they use their own family members for cultivating the land. Now when you're using your own family members for cultivating the land, whatever labor cost is there of those family members must be paid. You should not ignore those labor costs, because even though they are family members of the family members who are working for the farm, they are still working and they need to have some expenses being done. So to maintain proper accounts, you should segregate your family members expenses and you should segregate your labor expenses. That is, you must pay the labor expenses. That is, you must have payment of labor charges being done for your family members. Even though they are family members, the labor cost must be paid. Okay. crop insurance scheme. Now you should have proper crop insurance scheme being done, that is due to natural calamities, like if there are any floods or any diseases, like we have due to covid, now we are facing so many problems, right? So there should be proper insurance scheme. There should be the crops must be proper insured, so that there's no wastage of food grains being done. Most of the time when there is rainy season, you find that the food grains are being spoiled because of the moisture or because of water flowing into the area of where you have stored the food grains and so on, right? So this should not happen. So even though if there is food grains being spoiled, you should have proper insurance, so that the food grains, which the loss which has been made on the food grains, can be paid off by the insurance company. Okay, so proper insurance for food grains must be done. Output and input. Now what is this output and input? Now see, you have this year whatever food grains you cultivate, part of those food grains will be consumed by the farmer, and part of the food grains will be sold. Okay, but the remaining but some part of portion of food grains is being kept by the farmer for cultivating the land in the next year. Okay, so the input of output of one is an input for another, that is output of one year is an input for another year. This year's food grains, part of the food grains you're going to, as a farmer, you're going to consume it. Part of them, of the food grains, you're going to sell them because you want to earn money out of that food grains, and another part of food grains you will keep it, you will maintain it, you will preserve it for the next year, because those food grains become seed for the next year. Okay, so input of output of one year is an input for another year. Okay, next one, valuation of inventory. Now valuation of inventory is nothing but stock. Okay, so you need to have proper valuation of inventory being done, that is you need to properly evaluate the stock which is there of food grains which is there with the farmer, maybe in terms of cattle, stock of cattle, or maybe in terms of the pottery products, or maybe in terms of the standing crops. Okay, whatever may be the inventory there with the farmer, he should see that proper valuation of inventory is being done. Next point, farmer engages in more than one farm activity. In such cases, profit or loss from each activity must be ascertained. See, now since farming is depending more on climatic condition, okay, based on the climatic condition, the farmer cultivates the land and have profits being done. Okay, so sometimes what does the farmer do is he's engaged into one or more than one activity. Okay, he's not only doing farming, but he's also doing some more activities along with the farming. Okay, so he is engaged in more than one activity, more than one farming activity. Suppose if a farmer is engaged in dairy farming, or if he is engaged in pottery farming, okay, apart from this he also has agricultural products being done, that is he also cultivates agricultural land. In that case, he must see that the profit ascertained from both, that is from dairy farming also and from agricultural farming also, are being recorded properly, and then proper profit is being evaluated. Okay, suppose if the farmer is engaged in agriculture, like if he's into dairy farming, okay, and also he is into agricultural farming. So whatever, these are two different things, that is he's also having dairy farming being done, he's also having agricultural farming being done. In that case, he must see that whatever profit is there from dairy farming and whatever profit is there from agricultural farming, both must be recorded in a proper manner, and then have analysis of profit being done. So that is nothing but a farmer engage in one or more activity. Okay, in such cases profit or loss from each activity must be ascertained. Now the next one is payment of wages in kind. Now here, what does this payment of wages in kind means is, if a farmer is engaged in farming, then in that case what happens is, payment of wages is being done in terms of farm products. That is, instead of giving them wages, they give farm products. Okay, like for example, if a farmer is using labor for cultivating the land, then in that case, instead of giving him wages in terms of cash, okay, instead of giving him cash, he gives him some amount of food grains, like the way we had it in barter system. Okay, goods are being exchanged for goods. Okay, similarly here, sometimes what does the farmer do is, instead of giving him cash, he gives him some amount of food grains. Okay, and then the food grains becomes his wage payment. Okay, so in that case, if the farmer is doing, that is, if he's exchanging goods, then in that case he must see that proper valuation of money is being done. That is, the food grains what you're giving, or the farm products what you're giving, must be calculated in money aspect, not in terms of, that is, even if you're giving it in terms of products or farm products, they must be analyzed, they must be calculated in terms of money. Okay, next point, depreciation on agro products. Now what does this depreciation on agro products mean? Most of the, see, depreciation is a non-fund expense. Okay, that is, every year you have depreciation. Now if suppose, if you use a vehicle, if you buy a vehicle, okay, when you use the vehicle for a certain period of time, so say for example, if you use a vehicle for 1 year or 5 years, then in that case you will have to pay depreciation when you want to sell that particular asset. All right, so when you're selling the asset, you will have to reduce the price of depreciation, you will reduce the price of the asset, because you have used that particular asset for certain period of time, and then the price of the product will be quoted. Okay, similarly for agricultural products also depreciation must be charged. But if you see, most of the agricultural products, you don't have any depreciation being charged, or it is why it is not being charged, because it is only in terms of appreciation. The value of the asset is always increasing, there is no depreciation being paid. Okay, like for example, in terms of land, now land, uh, it is always, the value of the land is appreciating, you don't have depreciation being given to such kind of asset. Okay, but wherever depreciation is needed, there depreciation must be charged by the farmer. Wherever there is, like for example, if it is land, then you can't charge depreciation onto land. Even if you charge depreciation, it is going to, I mean, the value of the land is going to increase itself. Okay, so there you rarely have some amount, you rarely find depreciation being given. But if you're using a vehicle for farming, then in that case you will have to charge depreciation for the vehicle. Suppose if you're using a tractor for farming, then in that case you will have to charge depreciation for that particular tractor. Okay, so wherever depreciation is required, you got to provide depreciation on the agro products. All right, next is system of accounting. Now you can use any system of accounting, it can be single entry system, it can be double entry system. Okay, any system of accounting can be used, provided you find correct amount of profit or loss being made. You should know what is the amount of profit and what is the amount of loss being made, and that's how any system of accounting can be followed, whether it is single entry system or double entry system. Storage of farm products. Now you cannot store the farm products for a very long period of time. Okay, since those farm products are perishable products, okay, they get perishable after a certain period of time. You cannot store them for a long period of time, and that's how what wherever the products are, whichever products can be stored for a long period of time, that should be, I mean, there should be proper storage system, and also the cost of storage must be evaluated. The farmer must see that he should not incur very high cost of storage. If the cost of storage is high, then the selling price or the expenses incurred on the product will be more, and that's how the selling price will also be more. Okay, so storage of farm products is you got to store the products into a right manner, into a correct manner, and also see that the storage cost is not very high. If the cost is very high, then it becomes very difficult for this farmer to sell the product. Okay, next is tax payment. Now you don't find any tax being applied for farm products. Okay, you don't have any tax being applied for farm products, but wherever there is tax to be paid, the farmer must see that he must have proper payment of tax being done wherever required. All right, hope you have understood today's class. In the next class we'll start with the other aspects of farm accounting. If there are any doubts, please let us know. Thank you so much.